Welcome to another edition of the Inspired Stories podcast, where leaders share their experiences so we can learn from their successes and be inspired by how they've overcome adversity. My name is Anthony Codaspoti, and today's guest is Ryan Baird. Ryan is the managing partner at Baird Augustine, a cross-border neo-investment bank founded in 2010. Based in Los Gatos, California, and focused on providing financial services to individuals and corporations in various sectors. Baird Augustine aims to provide investment opportunities and deliver innovative solutions, and they have been recognized for their unique approach to cross-border investments. Ryan himself has an impressive track record in investment banking, risk management, and leadership, having previously led Leica, a social media platform that raised $35 million from investors. He also played a key role in investing in Xiaopeng, the electric vehicle company now listed on the New York Stock Exchange as XPEV. In addition, Ryan is a managing partner at Haupt Family Office, where he continues to steer strategic capital initiatives. He has also founded Flotilla Asset Management and was instrumental in championing innovative ventures across diverse markets. His passion for fostering growth and innovation has made him a prominent figure in the industry. Now, before we get into all that good stuff, today's episode is brought to you by my company, Add Back Benefits Agency, where we offer very specific and unique employee benefits that are both great for your team and fiscally optimized for your bottom line. One recent client was able to add over $900 per employee per year in extra cash flow by implementing one of our innovative programs. Results vary for each company, and some organizations may not be eligible. To find out if your company qualifies, contact us today at addbackbenefits.com. All right, back to our guest today, the CEO of Baird Augustine, Ryan Baird. I appreciate you making the time to share your story today.
Thanks for having me. It's good to be here.
So, Ryan, you've had some interesting career stops along the way before forming Baird Augustine. How would you characterize sort of the arc of those earlier experiences?
Yeah, so I've always been in the institutional investing space. Starting right here on Sand Hill Road, I was working for Morgan Stanley in their private wealth management division, working with clients that had $50 million of investable assets or greater with Morgan Stanley. And then I went into the hedge fund space where I was arbitraging volatility. I did some corporate development where we were looking for companies we can merge with or acquire. I did global venture, where we were investing in 9 different countries every single year, and then bringing the top startups back here to Silicon Valley and helping them raise capital. And then I ran my own startup. And the way I would really categorize it is I've always been in the institutional investing space where talking to investors that can deploy anywhere between $5 and $100 million into one deal. And lots of interesting lessons along the way, and happy to share any of the insights you want to know about.
Yeah, thanks for that. Say more about arbitraging volatility. What does that mean?
Yeah, so back when I was trading for a hedge fund and then running my own hedge fund, we were arbitraging volatility. So we were trading US listed options that are on stocks. And you can kind of think of it like insurance if you're not familiar with options. You can basically buy insurance on stocks. So if they were to fall, you don't lose as much money as if you didn't buy the insurance. And vice versa, you can buy insurance that it doesn't go up too much. You can sell that insurance. You can sell the downside or buy the downside insurance or sell it as well. So it gives people a lot of options. And what we were really doing was just hyper focusing on 3 to 5 different names. A lot of the other market makers or people that were providing liquidity in that space, they would focus on 100+ names. So what my mentor did was just start focusing on the high volume names, and he trained us how to do that as well. And we were essentially just trying to buy really, really cheap volatility and sell expensive volatility at all times. And then at the end of the day, we would go home market neutral. So we wouldn't be speculating on direction because honestly, we had no idea where the market was going to go. So during the day, we would just try to sell expensive volatility, buy cheap volatility. And then when it got close to the end of the day, we would make sure that we were market neutral so that we weren't taking any market risk.
And was this a sustainable practice?
So the big lesson from arbitrage is that my teacher in or my professor in college was correct in that arbitrage is there, but it doesn't stay there. And I started my firm, Flotilla Partners, in 2010, and I had the dream of running this for decades. But during the time period that we were running the fund, options went from being priced in nickels to being priced in pennies. And once they made that transition, our margins just got crushed. So saw the writing on the wall and made my move.
Interesting. So just that switch from nickels to pennies was enough that that shrunk the available margin that could be had on either side, whether you were shorting or longing. And so you're like, oh, I see where this is going. Time to tap out.
Exactly. There were some other more technical rules too, that happened that also were a big influence. But a lot of the stuff that I was doing doesn't even really exist anymore. For example, if you were to provide liquidity on some exchanges, you would get a rebate. And if you took liquidity on a certain exchange, you would pay a fee. So there actually became a moment where you can arbitrage these fees, and I had written some algorithms to help do that. And that's just a crazy world where you're trading at the same price and you're getting a tenth of a penny, but you're trying to do it a million times to make that tenth of a penny. And it just became tougher and tougher. We were also based in San Francisco, and it kind of felt like we needed to be more closely located to the exchanges if we were going to continue to do it. And we really just didn't have the capital to make that kind of investment.
Gotcha. Okay. So when did you start some of the newer ventures that you're still involved with today? Maybe let's start with Baird Augustine. What was kind of the founding idea behind that? Why go through the trouble?
Yeah, that's a great question. So, both of my parents actually worked for Hewlett Packard their entire careers. So I have the HP way ingrained in me. And the HP way was to run a business that is very relationship focused. It's not transactional. It's not transaction focused. And if you look at Silicon Valley, I mean, Steve Jobs had an internship with Hewlett Packard. Wozniak worked for Hewlett Packard. During the early days, Apple was very much a relationship focused business, and that's how they were able to achieve such big things. And Google, Amazon, Meta, they all copied HP, and they were able to accomplish big things because of this relationship-based culture. However, over the past few decades, we've seen these tech companies that start off being very relationship focused, starting to grow to be 50,000 people, 80,000 people. And once you have that many people, it's hard to remember everyone's wife's name and their birthday and how many kids they have and what they're involved in. And the culture changes, and you start seeing the average tenure, how long people work at a particular company. You see that number start dropping. And in Silicon Valley previously, it was well over 10 years that you would see people, have a career. And as Silicon Valley's become more transactional, you see that average tenure really starting to decline. And now only Nvidia and Tesla have an average tenure over 2 years, which just means there's an incredible recruiting cost that is happening in Silicon Valley because people are kind of bouncing around, trying to maximize their paycheck
Even at these
on the
really
ground.
quote unquote desirable high level employment opportunity, like I think about an Apple, their typical turnover is faster than 2 years. Is that right?
That's correct. Their average
Wow.
tenure is less than 2 years. And that just speaks to Silicon Valley becoming more transactional as it's gotten larger. Now, the exact same things have happened in investment banking. I mean, when I was at Morgan Stanley, we were very much a relationship-based culture. And, we would do anything for our clients, whether it was relating to finance and in our job versus just being a friend. And when I did global venture, I got to meet a lot of new family offices that I hadn't met before, and many of them would want introductions to some of the bulge bracket investment banks. And I was shocked. The feedback I got back from the introductions was really negative, and I take that personally. Um, and basically, these investment bankers were just treating these family offices very transactionally, and the attitude was, pay us or you're dead to us.
Mm.
And the first few times that happened, I'd realized there was an opportunity. And um, along the way, my partner, Henry Augustine, had reached out to me. He wanted to help me raise capital to launch a hedge fund. But I was running my startup at the time, so it wasn't really good timing. And he had told me that he had launched a investment bank called Peer Equity Partners, where he was just going to work for clients for equity. And I was like, wow, that's a crazy idea. I don't know how you're going to make any money, but I love crazy ideas. Let me be on the board. And oh, by the way, I know a company that is looking to sell right now for a couple 100 million. I've already introduced them to a number of bulge bracket investment banks.
Sorry,
And
let me stop you there. What is bulge bracket investment bank? What does that mean?
so bulge bracket investment banks are like JP Morgan, Morgan Stanley, Goldman Sachs,
The big
Citigroup,
boys.
the big boys. They're the bulge
Okay.
bracket. Everyone else is kind of chasing them or will probably be one day acquired by one of them. But it just basically means that you're getting introduced to the best in the industry.
So you
I
had
work,
this company that looking to exit for $100 million, and what
yeah.
happens from there?
So I introduced them to Henry and kind of wanted to see how the investment bank would proceed. And at the same time, I was winding down my startup and I was talking to a number of startups that wanted to either have me be the head of corp dev or be their CEO and help them raise capital. And it just dawned on me that instead of working for one of these companies and putting all of my eggs in one basket, I can actually start an investment bank with Henry and we can work with all of the startups and help all of them raise capital. And that's when Baird Augustine was born. Um, we still do have a few legacy clients that we are working just for equity. But the vast majority of our clients, they've already raised, call it $5 to $25 million, and now they need to raise an institutional round. And the CEO would much rather work on building the business versus talking to hundreds of investors. So we take over that role. We'll also help them reach any of their business objectives while we're taking over the investor relations process.
Okay, so that's what you're doing. You're stepping in to say, hey, we know how to talk this talk. We've got relationships with the institutional investors. Let us go out, present you to them in the way that we know, that they are sort of open to receiving it, and you can still continue building your product or your service over here. Focus on what you're good at.
That's correct. We want them to focus on what they're good at. We don't want them spending time, talking to a bunch of investors when they can be focused on building the business.
And so, what does a typical portfolio company look like for you guys? Are there particular industries or sizes or geographical locations that you're looking for?
We're really stage agnostic, industry agnostic, but they tend to be raising $100 million plus. That's kind of the main common thread. If they're not raising $100 million right now, They're already a super successful entrepreneur that has already had $100 million exit, and this is their next big idea. We'll step in and support them as well.
So $100 million to myself sounds like a lot of money. Um, Paint a picture for where these companies are at when they're raising that kind of capital.
Sure. So, one of our clients right now is building robots to go help the nursing shortage that we're experiencing right now. These robots don't walk because they don't really need to. They just roll and they can administer all of the medicine flawlessly and document it, which is really important. They can also give shots, they can also cook food and deliver it, and you flip out the battery once every 24 hours, and they're good to go. They're not there to replace the nurses. They're there to do things that nurses don't really like doing in the first place so that the nurses can do more human things. This client already has $300 million contracts to build these robots out, and they're raising $100 million right now to build a manufacturing center to build these robots.
Can we mention their name?
Yeah, they're called Beyond Imagination. Um, the co-founders are Dr. Harry Clore, who is the only person to get two PhDs simultaneously. He got his in physics and science. And then we have Ray Kurzweil, who's often considered one of the leading minds in AI. He's been on the cover of Time magazine and very highly regarded, and we're honored to be working with them.
So have they developed, like, is there a working prototype out there that is
Yeah.
in practice that people are interacting with now?
Yeah, you can check out the videos on YouTube. It's beyond imagination. The robots are blue. Um, and they're going to continue scaling and deploying these robots. And, we're just excited to grow with them.
That's fascinating. I mean, this is really futuristic stuff that's here today. Okay, so we got to do a little sidebar because that's just the first one you brought up. Give us another portco that is doing something particularly fascinating right now.
Sure. So we also host a lot of events for investors. I think there's a lot of events for entrepreneurs out there, and I think those events are really, really great. But we do events for investors, and we allow investors to talk about their portfolio companies. We just had a barbecue this last Saturday and had a really, really good time with a group of about 65 people here in the Los Gatos Hills. And we had a number of great startups, but one that I would point out is called Orbit Fab, and they are creating gas stations in space.
Wow.
Before, they would send up a satellite and it would be solar powered and it would last for about 5 years. And then it basically falls from the sky and they put a new one up. Now they've invented a way to actually refuel them while they're in space, essentially taking the SpaceX model of reusability and applying it to satellites. And now everyone who's sending satellites into space can use them a lot longer, and it reduces the cost of creating these things and reduces the cost of deploying the technology.
So up until now, the reason that a satellite traditionally has an end of life is not because it, I don't know, sort of disintegrates or falls apart or becomes antiquated. It's because eventually whatever power source is on board is no longer adequate to sort of keep it flying in the correct part of orbit to keep it safe and aloft and all of that stuff. And so when that happens, they sort of plan for it, and the satellite just falls out of the air, burns up in the atmosphere, and they send another one up to fill its place. Am I understanding that correctly?
That's correct. Yeah.
And
And
so now there's some sort of a mechanism, and what is it doing? Is it like swapping out a battery, or like what does the refueling process actually look like?
It's it's a satellite that's floating over to the other satellites. It has this really high-tech gas nozzle that essentially will insert the fuel and not make any of it leave. And this gives them a lot more optionality, where before the satellites would just kind of float around Earth and you didn't really want to move them because you didn't have that fuel available. Now you can
Mhm.
actually move them and redesign them and just extend the life by, 5, 10x. Um,
And so it's
so,
gasoline that's powering these things,
well, they
or
have
it's
a
gasoline that's
special,
powering the movement component.
yeah, it's a special type of fuel that
Okay.
they use in these satellites, but incredible company, leading their market in a new industry, and really excited about where they're headed.
Okay, so as I understand it, there's sort of three pillars of your business, and we kind of have touched a little bit on the investment bank. Say more about the events that you were just mentioning. You host these in Los Gatos where you are. Who's invited? Why do they come? What's the benefit that folks get from attending?
Yeah, so we do a lot of dinners and barbecues and walks around Lake Versona, all with accredited investors. And depending on which investors we have with us, will depend on which portfolio company gets talked about. So we're always changing the different industries. But these events are for family offices, founders that have already raised, call it $5 million, founders that have already sold a company for $100 million plus, and they're just looking to connect with other people that are deploying capital across the alternative asset class space. And, we'll have a lot of these smaller hikes and barbecues and dinners. And then once a year, we're going to be doing the Silicon Valley Economic Forum, and we're going to be bringing together some high level people to do our annual event. And the formula is pretty simple. We get a institutional investor with 100 billion AUM or greater. At our last event, we had Fiona Ma, who's California State Treasurer. She oversees our state fund with 150 billion under management. She's also on the board of CalPERS, which has a $500 billion under management. Um, and she's invested in a lot of emerging managers. So a lot of emerging managers like to come out and hear her talk. We also get a CEO that's taken a company public. At this last event, we had Dan Springer, who took DocuSign public, gave a great talk about the whole process and how to deal with board members. We'll also try to get someone from the Mag Sevens investment team. At this last event, we had Alan Wu, who does corporate development for NVIDIA. He was talking about where NVIDIA is going to be investing in AI over the next few years. It was a great off the record talk. And then we featured a number of GPs across commercial real estate, private equity, hedge funds, venture capital, crypto. Um, We've also seen a lot of GPs in the entertainment industry, especially film. Um, and then we feature a number of our clients that are all raising, between 50 and hundreds of millions of dollars. Um, and then lastly, we have elected officials. A lot of the family offices in our network like talking to them. We had the mayor of San Jose, the mayor of Santa Clara, the mayor of Fremont, the vice mayor of Sunnyvale, city council member Ben Tanaka from Palo Alto, and a couple economic development commissioners. And then the last thing we like to do is to make our events not too stale and to keep them exciting is we like to partner with different cultural groups. This last event, we partner with Rev Art, which is a beautiful gallery in San Francisco, and they just opened up a new gallery in Mountain View. And they came and did a pop-up art gallery at our event. And then we had Spot, the Boston Dynamics robotic dog, give people a tour of the pop-up art gallery, which is pretty fun.
You had a robotic dog giving a tour.
We had a
That's great.
robotic dog giving a tour of the art gallery, and then we had night robotics security guards in the parking lot. And they're a publicly traded robotics company.
That's great. And it sounds like the folks that you've got coming here are sort of the cream of the crop in your corner of the world, right? These are the top level investors, very successful founders. And you guys are positioning yourself sort of at the center of all this, the connectors, so that, just sort of more deal flow, more opportunities come to you guys because you're known as being sort of the center of all this space.
Yeah, we just want people to know who we are and some of the families that we're working with and help them deploy their capital into above average deal flow. It's amazingly simple and amazingly complex at the same time.
And then the sort of third component, as I understand it, is your hedge fund. Say
That's
more about
correct.
that.
Yeah, so in a previous life, I was running a hedge fund arbitraging volatility. And the problem with that strategy is that it's arbitrage, so it can only take so much capital before the arbitrage just isn't big enough to take more capital. And I didn't like the idea of the arbitrage going away, and then you have to find a new arbitrage, otherwise you have to start all over or cease to exist. So we've really honed a predominantly long strategy where we're investing in market leaders early. Being in Silicon Valley, we get to see all the hype cycles and all the buzz, and I feel like that has given us consistent advantage in finding these market leaders, a year or two before Wall Street really understands them.
I'd actually be curious to hear quite a bit more about that, whatever it is that you're allowed to say in terms of the trends that you're seeing. You talked about the off the record conversation that you had with the gentleman from NVIDIA, and you're in the middle of a lot of really interesting conversations, it seems like. What are the things that you're kind of jazzed about that are taking place right now?
Yeah, I mean, obviously AI is everywhere. It's almost like just saying you're involved in tech is saying that you're involved in AI now. Um, but going a little bit more specifically, I think space is probably one of the biggest opportunities in our lifetime that's in front of us right now. We're really excited about some of the satellite companies in our portfolio. And then um, robotics is also a huge theme, and we have a number of different portfolio companies in that space. And then the last thing I would say is blockchain and Web3. I've been following Bitcoin since 2009 and really didn't think it was going to last this long. But I've been telling people if it hits $1,000, things probably going to be going a lot higher because if it's not worth zero, then it's worth something. And what that something is, I think, is yet to be determined. But I think one of the biggest trends right now that no one's really talking about is that Bitcoin is eating Wall Street. And it really started with MicroStrategy, which is now called Strategy. And the really innovative thing that they did is that their whole business model is just to own Bitcoin as their treasury asset. And what they've done in order to raise capital is to sell convertible bonds. And what this does is for the first time, a bond manager now has access to a Bitcoin backed bond. Now, this bond manager can't invest in Bitcoin. They can't invest in MicroStrategy. They can't invest in preferred stock, but they can invest in the bonds. And now that MicroStrategy has allowed those bonds to be available, they were the number one performing bonds in the global bond market. And if you're a bond manager and you didn't own MicroStrategy, you weren't one of the top performing managers. And
Wow.
this is a big deal because now a lot of companies that are just holding Bitcoin as their treasury asset can also go to Wall Street and sell convertible bonds in order to buy more Bitcoin. And it's accretive because these convertible bonds convert above where the stock is trading today. So they basically sell $1 billion in bonds at let's call it a 50% premium to where the stock is trading. They go and buy $1 billion of Bitcoin. They get to add $1 billion of Bitcoin to their balance sheet. And because the convertible bonds are above where the current stock price is, um, it adds more Bitcoin per share. And the new way of tracking a lot of these companies is how quickly they're adding Bitcoin per share being compared to other companies. I know this is kind of a mouthful and it is a lot. I feel uniquely positioned to understand this because of the derivatives involved in all of this. The convertible bonds are essentially a synthetic leap call option. Um, and it's just fascinating. It's a huge financial innovation. It's giving uh, traditional fund managers access to Bitcoin derivative products. And now that MicroStrategy has been so successful, it's been included in the QQQ. And I would guess that later this year it's going to be added to the S&P 500.
Wow.
So whether people know it or not, if they have a retirement account, they're probably a little bit invested in Bitcoin. And it's a little bit now, and it'll be a lot later.
Okay, so a couple of questions on this. I want to wrap my head around it. Why can't investors just invest directly in Bitcoin? What's the hurdle there?
So this whole thing came to me because the Bitcoin ETF was going to come out. I thought that I was going to research all the Bitcoin ETFs and be like, oh, okay, if you don't want to hold your Bitcoin yourself and you want to hold the ETF, this is the ETF we're recommending to family offices. And what happened is we learned about all the ETFs, but we found MicroStrategy. And what we realized is that if you own the Bitcoin ETF over 20 years, you lose a little bit of your Bitcoin because you're paying the management fee every year. If you buy MicroStrategy today, over 20 years, your Bitcoin per share inside MicroStrategy grows. And that's the big difference. So, in my opinion, you would rather own MicroStrategy over Bitcoin because if you just own Bitcoin, you just own Bitcoin and it doesn't grow. If you own a Bitcoin ETF, you actually lose a little bit of Bitcoin along the way.
And explain what an ETF is, Ryan.
An ETF is an exchange traded fund that gives you exposure to the Bitcoin index. So you could either own that index and get a mirrored exposure to it, or you could actually hold it yourself, but then you risk getting hacked and all these other things that are problems. So an ETF is just like the S&P 500, the SPY, that holds the top 500 companies in the US. The Bitcoin ETF just holds Bitcoin.
And so what is it about MicroStrategy that allows and sort of the mechanisms that are at play here that allows the value of the Bitcoin per share to rise over time, whereas in an ETF, you're going to lose a little bit because of those management fees. Doesn't MicroStrategy, aren't they exposed to sort of those same management fees?
MicroStrategy holds its Bitcoin at Coinbase as its custodian, and they're not being charged the same rate that an ETF has to charge its holders. So because if you own the ETF, it's like 0.8, 0.9% per year that you're losing, right? Where if you just own MicroStrategy, you're not paying that fee, number one. And number two, Michael Saylor, the CEO of Strategy, has said over and over again that he's just going to continue to sell bonds, preferred stock, and stock in order to buy more equity. And as long as he does that, as he buys more Bitcoin, your Bitcoin per share grows. And I don't think a lot of people fully understand this, but um, once they do, MicroStrategy and there's dozens of companies that are doing this. It's not just MicroStrategy, but MicroStrategy is the clear market leader.
When did I'm trying to figure out because we've seen the price of Bitcoin, be highly volatile. But I don't you can clue me in here what the exact time frame is. I feel like in the last year, maybe 18 months, the price has really risen sharply again. And so I'm curious how that recent increase in price has aligned with MicroStrategy and the strategy that they're implementing? Are these sort of running in parallel? Is this the reason? I guess the bigger question I'm asking is this the reason that the price of Bitcoin has gone to the moon again.
I mean, this is part of the reason. And, I think kind of the first step was the Trump administration being much more friendly to the blockchain space. And then number two, strategy leading the way with their Bitcoin treasury strategy. And then dozens of other companies have started copying their strategy. We're just now starting to see states want to hold Bitcoin as their treasury strategy. We've already heard countries are discussing keeping it on their balance sheet. It sounds like the US wants to potentially convert their gold into Bitcoin. And there's only 21 million Bitcoin. So the price needs to be readjusted to the demand. And, we're only at about a 3% adoption rate of Bitcoin. So that's like the internet in 1990. That's like social media in 2005. And I think as more states, countries, and companies get involved, we'll continue to see it become volatile, but I think it'll prove to be a more scarce commodity than gold, silver, oil, that it just seems like we keep finding more of.
So, Ryan, what's your opinion? Is there, and maybe you can help me rephrase this question if I get it a little bit wrong, but is there actual usable functions for Bitcoin either today or coming soon? Or is this really a speculative tool because people have decided that there's value to it and it's scarce, and so that's what's driving up the value of it?
I mean, I think there's a lot of different reasons why people own it. In the US, our central bank does a pretty good job of keeping inflation around 2%. So, you know, Americans have a harder time understanding Bitcoin versus people who are in emerging markets where there's just runaway inflation.
Mhm.
Um, when people see Bitcoin, they go, "Oh, wow, it's really volatile, right? It's really risky." But it's really reacting to global fiat currencies, which are volatile. And when you have runaway inflation, that is being priced into Bitcoin. Um, and if you live in an area where there is runaway inflation, I mean, are you going to own gold or are you going to own Bitcoin? What are you going to do to protect yourself from inflation? And that's really the great debate. For me, I've been very skeptical of Bitcoin, but no one's hacked the network and it's growing exponentially. Um, and that in itself, I think, is extremely valuable. And I do believe in the future, especially as Bitcoin becomes less volatile, I think it'll just be used like cash. However, right now, until we get to that type of adoption, I think it's mostly just going to be used as a store of value.
Let's shift gears and maybe talk a little bit about some of your previous work. Lyka, Lyka. Tell me about this company and the exciting exit that you were a part of.
Yeah, so I'm really passionate about allowing people to own their own data. Um, 20 years ago, when I was in college and people were talking about the internet, there was this idea that everyone would own their own data and we would be able to monetize it. And, we wouldn't need some kind of universal basic income because everyone would just be monetizing their data. If we have robots doing all of our work, the costs of a lot of things drop and you could literally just live off of your data. So, um, we built a platform that is similar to Instagram, and we did a beta test in Southeast Asia, and it did very, very, very well. But our dream is to bring it to the US. So we sold that code, and we really want to um, either fund an entrepreneur that can bring something like this back or to start it ourselves. But the idea is that when you go on social media, if you see an ad, you should earn money from that ad. That advertiser is paying to get your attention, and yet Facebook takes all of the money and doesn't share it with you, even though, in my opinion, the advertiser is paying the person. And right now, there's no real incentive for you to put on your Facebook, where you're from and what movies you like and all your preferences, what brands do you prefer?
Building
Because,
out your own profile. Yeah, if you did that,
yeah.
you would get better ads sort of tailored to you.
So our idea is we can build a social network and we can allow the users to give us more data because they know they're going to be compensated for the ads that they watch. And that way we can send more targeted ads to people than other platforms. And the idea is to give away 90% of the ad revenue. We just keep 10% to run the platform. And then one day we'd be able to monetize the wallet.
And so this, but this is, correct me if I'm wrong, this is something that you built and then you exited to another company?
Yeah, we built it and did it in Southeast Asia and realized that we had to rewrite the whole code if we were going to do it in the US. So we sold that off in Southeast Asia to another
Okay.
strong entrepreneur that we believe is going to be bringing it back. Um, but we're looking to do something in the US.
Gotcha. Tell me a little bit about how the family office that you're with now.
Yeah, so Hot does a lot of debt offerings, and we can do really anything in the whole supply chain. Um, Oftentimes we'll find companies that, just need better debt options, and we can step in and hopefully help them. We'll also come into private equity acquisitions. They're obviously acquiring cash flowing assets. And we find that we can help a lot of those GPs get the debt that they're looking for.
Hmm. Um, what else is it that you're involved with here? Focus on risk. What is this?
Yeah, so Focus on Risk is our investment club that we started back in 2009. Um, I think I'd mentioned we started doing events for investors. That's the big thing that separates us from other people. And we just had a barbecue this last Saturday that was a big success. And we're looking to do our next one on June 1st.
So you guys have sort of with Baird Augustine, you guys have successfully and just yourself personally successfully managed a lot of high stakes fundraising, large scale projects multiple times. Um, what do you think it is about either your personality or your mindset that has been really crucial to kind of pushing your success forward? What makes Ryan Baird so successful?
Honestly, I think it's the focus on risk. That's why I named the group that way. There's a huge um, mistake that I see a lot of founders make over and over again, and it's having these ridiculous conversations about how much money they're going to make. The reality is you can't control your profit, but you can control your risk. So I'd much rather not have conversations about what color Lamborghini someone's going to buy and talk more about the risks of the business that would prevent them from being successful. And having these honest conversations and removing these layers of risk is really what helps these companies get to that next level. And it's just an intense focus on what is the biggest risk that is preventing us from moving this company forward. And usually, if you can figure that out and you can evangelize that to your advisors and board members and employees, everyone's got their eye on the prize and you can remove that risk.
So let me play devil's advocate because I want to better understand your point here. I'm a founder. I've got a company. We've got forward momentum. Things are going well. Of course, I can control my profit to some degree. I'm going to do the right kinds of advertising. I'm going to form strategic partnerships. We're going to listen to our clients and, build the feature sets that they want. What do you mean that I can't control my profits and where I really should be focusing my energy is on managing my risk?
Well, if I told you to increase your profits to $1 billion a year, you wouldn't be able to do that without major reform to the business, right? So when I say you can't control your profits, it's it's that you can't control if you could 100% control them, you would be a trillionaire, right? Or whatever number is bigger than that. Um, so instead of focusing on things that you can't control, I'd much rather you focus on some details that could increase your profitability, or it can increase your conversion rates, or it could open up your top of the funnel greater, right? Things that you can quantify and really talk about are the things that we like to bring up when we're talking to clients.
So you mean getting more into the details, not just saying I want to make $50 million this year so I can buy a green Lambo. It's more of, well, okay, if $50 million is your target number, what are the steps that we have to achieve before that? We've got to make the funnel a lot wider so we get more folks in. We've got to improve our conversion rates so that the funnel doesn't look quite so narrow at the bottom. It's a little bit wider. You're just talking about sort of focusing more attention on each of those individual in between steps.
Exactly.
Gotcha. Okay, let's shift gears for a moment, Ryan, because successful guy, you've been involved in lots of different cool ventures, so many interesting things going on now. I think it'd be really helpful for folks if they could hear a serious challenge that you've overcome in your life. What was that, whether it was personal or professional? How'd you get through it, and what did you learn coming out the other side?
Yeah, so when fundraising for my previous startup, I mean, we talked to every single VC on the planet that I can get in front of, and they literally all said no. And there's a moment in a startup's life where you're kind of too early for investors, but you also need money in order to move forward. And without being able to raise that capital, you're kind of dead in the water. And this happens to, a countless number of startups. And, you know, we we were faced with really tough choices during that time period. And the way that we got out of it is we just tried to communicate as much as we possibly could to people that would listen to us, our advisors, and we started telling them where we're going to be, where we think we're going to be in 3 months to 6 months. And every time that we would do that, we would really sandbag those expectations. If we knew we were going to have one, blogger write about us, we would let them know that, and then we would do everything in our power to try to get another blogger to pick us up. And when we came to our quarterly reviews, it was, hey, remember we thought we were going to get this, one piece of earned media? Well, we got two of them. Remember when we said we thought we were going to have 100,000 users? Well, we have 150,000 users. So we were constantly under promising and over delivering because we wanted to build that rapport with the people that were working with us. And by doing that, we were able to get some angel checks because they were able to follow our progress and see that we were beating our own expectations. And after doing that for a couple of quarters, those angel checks gained even more confidence in seeing us execute. And eventually, we had raised from over 300 angel investors, which I don't recommend doing.
Wow, that's a lot of
Um,
work.
but, we had to kiss a lot of frogs in order to find someone who would eventually fully believe in us and, be the main anchor investor in the project. So, um, VCs aren't the only investor in venture. And, VCs are very much looking, uh, the best ones are looking for pattern breakers, but most of them are looking at pattern recognition. And, if you don't have those numbers, when you're fundraising, it's going to be very difficult to raise from VCs. So I really was fortunate that we got to meet some great angel investors that introduced us to family offices, and then we were able to, build rapport to them by, letting them know where we thought we were going to be, and then busting our ass to make sure that we were ahead of that every time we had an update. And, we raised all of our money from family offices and angels, and we didn't go the VC route. And I actually recommend that to a lot of people because, VCs are very much looking at the returns in their fund, and that's not necessarily synergistic with your business, where family offices are looking at their whole portfolio. And if there's synergies, that's oftentimes one reason why they'll invest and to give their portfolio companies a strategic advantage over other companies.
Oh, so a family office may decide to invest not only because they see maybe the profit potential of this company really becoming big, but because, oh, that fits with another one of our investments over here. They could provide some services to them that would really give them a leg up on their competition.
That's correct. Yeah.
Mhm.
And another great thing about a lot of family offices is they don't have this, bizarre, exit by year 10 kind of philosophy. And I think giving founders the freedom to do what they want to do, um, is very valuable in people's journey.
And so going the route of a family office can really give the founder, the entrepreneur, a bit more flexibility in terms of the path forward and sort of the timeline for needing to be ready.
Absolutely.
Yeah. And so it sounds like that was a big lesson. Folks are listening to this in various stages of, figuring out if they want to raise funds, trying to raise funds, and they're like, oh, that's interesting. That's a good piece of nugget. The other thing I heard you say is um, under promise, over deliver. So rather than shooting for the moon and tell you we're going to have 1 million followers by the end of the month, be like, we're going to get to 100,000 followers by the end of the month. And then when you contact them, you're like, yeah, actually, we're at 170. And they're like, oh, that gets their attention. You're not just blowing smoke, you're delivering and then some.
Yeah, that's
What?
correct. I think founders need to understand the arena. And, as a family office or an investor, you're constantly seeing founders that are going to be failing, and you're constantly being thrown information that you don't have any way to really verify. So, a lot of investors are highly skeptical of everything that you tell them. And, the best way to build rapport with them is to not lie to them and to be super open, honest, and transparent. If you need to raise capital, let them know that you are raising capital. If you're looking to get more earned media, let them know that you're looking to get more earned media. Same thing if you're looking to expand your advisors and board members, let people know that you're doing that, put that out into the universe, and then let them know what you are going to accomplish over the next month or the next quarter. And, those types of things need to be well thought out, because the last thing you want to do is tell them that you're going to close 3 clients by the end of the quarter. And they go, okay, well, let me wait until the end of the quarter. If he's telling the truth, I'll invest. If he's not telling the truth, I'm going to pass.
Mm,
You don't want to get there and be like, they're just not closed yet, but we still have them as a prospect, or whatever excuse it might be. They don't want to hear that. They want to hear that you're executing, and that when you say you're going to do something, you're going to get it done. And um, you know, I have found founders that underpromise and overdeliver, and they have very successful fundraisers, and they have lots of investors that want to be on their cap table. It's the founders that are deceitful and
mm.
are just exaggerating and just straight up lying are the ones that really have the toughest time raising capital, because they're just a below average deal.
How about for somebody that's even earlier in the process? They're like, I can't even get somebody to take my call, Ryan. Like, what advice do you have for somebody in that position?
I mean, if you're somebody who can't get any meetings and can't get in front of people, you're probably not the right guy to start a startup. Startups are extremely high risk, and I would argue that 90% of the founders that start a startup don't have the personality type to run a successful business. Maybe it's good experience for them, but the best founders are able to pitch. And as an investor, you're not looking at the pitch of, oh, if this person gives me a great pitch, I'm going to invest. It's a lot deeper than that. I think if the person can pitch, can they pitch the business to get someone to leave their job at Apple or Google or one of the top tech companies to your startup for low pay and some equity? That's a big pitch. Can this person actually do that? If they can't do that, then they probably are going to have tier two talent, and you don't want to be investing in tier two talent. The other question you're asking is, can this person get earned media? Can they pitch their story and get into blogs or get onto some podcasts or get into some media? Or is this the kind of founder that's going to have to pay a PR team to get any kind of media? And that's going to be an additional cost on this business for the rest of their life.
That's interesting. So you kind of see this as almost a helpful filter. If you can't get a meeting, if you can't get some earned media, if you can't get someone to leave Apple or another relevant tech company to come join your team, that probably says a bit about your personality, your drive, your ability to be able to sell this to all the people around you in your ecosphere. And that's a good indication that it's not something that you want to put your dollars into.
Absolutely.
Yeah.
Absolutely. It's not just the pitch to raise capital, it's the pitch to get employees, it's the pitch to get media, it's the pitch to raise capital from other investors that we're going to be trying to sell to. Um, if you have a great investor, I mean, or a great founder that can raise pre-seed money but can't raise A money, then what's the point? Right? So some people think like pitching's overrated or whatever, and I completely disagree. I think the people that are charismatic, that can get things done cheaper, faster, better, um, those are the horses you want to bet on.
Yeah. Ryan, I've just got one more question for you, but before I ask it, I want to do a couple of things. First of all, I'm going to invite listeners to go ahead and hit the follow button on your favorite podcast app. You want to get more great interviews like the one we've had here today with Ryan Baird from Baird Augustine. Ryan, I also want to let people know the best way to get in touch with you or to follow your story. What would that be?
Yeah, they can look me up online. Our company website is bairdAugustine.com. People can also look up Focus on Risk. We have a very active accredited investor group on Facebook, X, and LinkedIn. Um, and we're pretty public. So if you can't find me, then we can teach you how to Google.
And who are the kinds of people that you would like to hear from?
Yeah, so we're always looking to meet family offices and investors, really just so that we could understand their investment thesis. Um, and then we're always looking to meet founders that are either raising $100 million plus or have already had $100 million plus exit. We believe that we can help them on their next venture.
That's great. Last question for you, Ryan. I usually like to ask people about, what they're sort of excited about in the future, but we've kind of already had a chance to talk about that, AI, space, blockchain, and Web3. So let's do something a little bit different. If you and I were to reconnect in a year and you're celebrating something, what would you hope that one thing is?
Uh, a year might be a little quick, but we definitely want to go IPO. We believe that We can also play in the Bitcoin treasury space. We're super excited that we got our first Bitcoin payment this week from a client. And, we're really well positioned to help funds and founders in the Web3 and blockchain space. So hopefully, um, by this time next year, we'll have the plans to go public in about a year after that.
Okay, so 2 years would be, you think, a reasonable time frame for that to take place then?
That would be amazing. Yeah.
All right. Well, let's keep in touch. We'll do a follow-up episode.
Sounds good.
Ryan, I want to be the first one to thank you for sharing both your time and your story with us today. I really appreciate it.
Thank you. It was great being here.
Folks, that's a wrap on another episode of the Inspired Stories podcast. Thanks for learning with us today.